It's been a year since the split with Bitcoin Cash, and I thought it would be a good time to reflect on why we're using Bitcoin SV. The reason why we're using Bitcoin SV in a nutshell is that it is the original Bitcoin protocol that scales. So the original Bitcoin protocol did not have any type of scaling problem. The way to scale it was something that was widely misunderstood, but it's really simple in sort of conceptually, which is it scales the same way the internet scales, which is companies have to actually build infrastructure to make it scale. There is no fundamental theoretical challenge in scaling Bitcoin. It is not a theoretical problem to be solved. It is a purely practical engineering problem to be solved. In principle, Bitcoin scales by basically validating more transactions in parallel and working on things like improving the propagation speed of blocks and things like this. The underlying protocol does not have any type of issue that has to be resolved in order to make it scale. Instead, there are actually very good reasons to actually not change the protocol whatsoever for the same reasons that you wouldn't want to change the underlying protocols of the internet. Because if you change the underlying protocols of the internet, you break the applications that are built on those protocols. So a lot of these applications, either they're small businesses they find it very difficult, like which would be the situation for my company. We find it difficult to adapt to protocol changes just because we're so small that it's extremely costly to adapt to changes. Other reasons are things like, well, you have to leave the protocol in place for things like contracts to actually continue to work for long periods of time, or for hardware that has the protocol embedded in it to continue to work for long periods of time. So there are very good reasons to leave the protocol fixed. So we adopt the perspective that basically, if it isn't broken, we shouldn't be fixing it. And so that's the idea. It's the original Bitcoin protocol that scales because companies are going to build infrastructure. One of the implications of this is that the size of blocks is unbounded. Now, technically speaking, we have a maximum block size of 2 gigabytes right now, which is far larger than any of the other ones that I'm aware of. But it's not technically unlimited yet. We are, when I say we, I sort of mean the Bitcoin SV ecosystem, but there's a team of people at InChain that are specifically working on this. So, what we as in the ecosystem, but what they specifically at InChain are working on is restoring the original protocol. So we're going back to the very original one, which will be complete next year. That includes just a number of different changes that are irrelevant as far as the user is concerned, but we'll conclude all of those changes and restore the original protocol. And from there on, there's no reason to change the protocol itself. I mean, unless there's some security vulnerability or something like this. But I think that's pretty unlikely, and I think that we can deal with that if that ever happens. But I think that's unlikely to occur. And so long as there isn't any type of fatal issue like that, we're better off not changing the protocol at all. So that's the idea behind Bitcoin SV, and this makes a lot of business sense because, as I was saying, for a small business like ourselves, we need a stable protocol so that we can reliably build on it without our app being messed up by underlying changes in the protocol. Other reasons are things like, well, we do need it to scale. And this is where I want to tell a bit of a story about sort of my background, the history of this company, and why scaling is centrally important to our company, because we've lived through the problems that arise from blockchains that don't scale. So I'll go all the way back to, it's a bit of a personal background, but I worked at Reddit from 2014 to 2015. I was the cryptocurrency engineer of Reddit. I have a funny story to tell about that, which is we were going to launch a cryptocurrency integrated into Reddit. And what we were going to do was issue Reddit equity to the users. Now, what we quickly realized was there are two very big challenges to doing this. One is legal and one is technical. The legal reason is if you try to distribute equity to hundreds of millions of users all over the world, you basically have to be a public company, and all of those users must go through a KYC process to do something like this. So it's extremely legally challenging because Reddit was not and is not a public company. And we don't want to have all the users have to do KYC. That's somewhat contrary to the functionality of Reddit as a platform. So those are the legal reasons, and those would turn out to be. I don't want to speak for Reddit as a company. I mean, I haven't been involved, since like January of 2015 or something like this. So I have nothing to do with Reddit today. But I wouldn't be surprised if, to this day, insofar as they're still interested in doing something like this, they still haven't figured out the legal issues, because it would be basically impossible to issue equity, I think, to that many people, in a legally compliant manner. I think it'd be better to distribute something else, something that's not equity. The other problem is technical, which is that basically that was in 2014 when we started working on this. That was when there was a block size debate that had sort of started. People had different opinions about what to do about the block size situation with Bitcoin. So the situation with the block size in Bitcoin in a nutshell is that the original software did not have a limit on the maximum block size, which means the transaction volume was unlimited. The problem with that approach is that there is a DOS attack vector whereby, because the network was so small, a large actor could basically create lots of transactions that would break every single node. And so Satoshi inserted a maximum block size of 1 megabyte, which reduced the maximum transaction volume to 7 transactions per second. So that was adequate for a small-time project, but if you start running numbers on what it would take for a real business, you need a lot more transactions per second. So for instance, for Reddit, you can run numbers around what would it actually take to distribute transactions, to say 100 million people, 100 million users of Reddit. Well, over what length of time do you plan to distribute 100 million transactions? If it's over, say, 100 million seconds, that's one here. I'll run some math as we're computing this. We can just do this on the fly. Let me go to Google here. If it's 100 million seconds in days, it would be 1,157 days that it would take at 1 per second. Now we can go slightly more than that. So let's say instead of 100 million seconds, it's that many days divided by 7. So the maximum rate for that you could distribute this to all Reddit users would be 1,157 divided by 7 is 165. So it would take 165 days to send a single transaction to every single Reddit user. That assumes the only use of the entire blockchain is nothing other than sending one transaction to each user on Reddit. So the users would not actually be able to do anything with it because there's no room left for, say, sending money to another user or something like that, because the entire blockchain is full with nothing other than these initial transactions. So what that means is it's basically useless for that many people. I mean, that many people cannot use it if you're limited to 7 transactions per second. So we need a larger transaction volume. Okay, so that was a temporary measure inserted by Satoshi, but to the surprise of myself and some of the other people involved in Bitcoin, this became an extremely contentious issue, whereby a lot of people did not want to remove that limit. They wanted to keep the limit in place because they believed that it kept Bitcoin decentralized. But they had a very different view of what it means to be decentralized. My view of the decentralization of Bitcoin is that Bitcoin operates like an economy. It's decentralized not because everyone does the same thing, but because everyone does different things. It's not decentralized because everyone runs a node on their computer. It's decentralized because everyone can access this protocol with equal access. And so that you can do whatever you want to do with the protocol. But that doesn't mean that it's free to run a node or that you must run a node or something like this. It has nothing to do with that. You can run a node if you have the ability to operate a business profitably, but that doesn't mean that it's cheap, and it doesn't mean that it's free. And there might be costs associated with running a node. In fact, there definitely are. The costs are very high. But if you're good at operating your business, you earn more money than it costs to operate the node, and so therefore it's worthwhile. That's an economic view of decentralization. Okay, that's a market-based view of what it would mean for a network to be decentralized. I think that's the right way to look at it, but that view was not popular in the Bitcoin world. What ended up happening was, well, I won't go into all of the drama, but there was a lot of drama involved, and a different view emerged, which was the idea that everyone should run a node. And that view required fundamentally limiting the maximum block size to make sure that the cost of running a node was low so that a larger number of people could run a node. And they were willing to accept the consequences of this, which is that, well, there could be fewer people creating transactions than 2. So even though more people could run a node, fewer people could use the network in the sense of creating transactions. And so what emerged was this idea of something called the Lightning Network. But let me get to that in a minute and just say that while I worked at Reddit, we considered, I'll just say that we considered the options available, and we were very much aware that, well, I'll just say that there was no obvious way to solve this other than increasing the maximum block size. Okay, so fast forward a while. In 2015, I would end up starting my own company, and we wanted to create a decentralized social network. And we encountered the scaling limitations of Bitcoin. Because what started to happen around late 2015, and by early 2016 it was quite noticeable, the fees on Bitcoin started to increase. So by early 2016, to my memory, the fees were about 5 cents per transaction. Well, 5 cents per transaction is low by many conventional payment standards, but it's actually extremely high by the standards of micropayments or by anything that you might imagine doing with social media. So we realized that, with the maximum block size in place, we were going to need some way to work around this. And in 2015, the Lightning Network had been theorized. And so what we decided to do, my former co-founder Clemens Lay and myself, we decided to implement a routed payment channel network like the Lightning Network on Bitcoin in order to reduce fees. So we set about doing this, and so that started from early 2016 to mid-2017. We were basically full-time dedicated to implementing this system. Unfortunately, what would happen is the fees on Bitcoin would increase further still. By early 2017, the fees were about $5 per transaction. Now, by then, we actually had a working routed payment channel system. So although we are not as well known as the Lightning Network, we actually had a routed payment channel system. It was a bit simpler than Lightning Network, working before Lightning Network on mainnet Bitcoin. However, we encountered this really big fatal issue of the fees being so high that the cost of opening a channel was actually prohibitively expensive. So there's no way you can ask the users to spend $5 that they lose to begin using a social network because they have to open a payment channel. And $5 was really a lower bound. It's more like $15 because they have to create a number of different transactions. So that was just because fees had risen to the $5 level at that time. And so we were somewhat in a panic in that, well, it looks like we simply cannot use Bitcoin at all. So the first thing we did was to actually switch all of our technology over to Litecoin because Litecoin was technically similar to Bitcoin and had lower usage. So the lower usage of Litecoin meant that we could at least have a working product that wasn't prohibitively expensive. But it was clear that the Lightning Network developers had the exact same scaling roadmap as BTC, which was their plan was to copy the software and the scaling roadmap. And so although there was a slightly higher transaction volume on Litecoin, it was clear that even if it were popular, we would eventually have the exact same issue and would still nowhere near be able to have the transaction volume that we wanted for a successful business. So we were sort of on the lookout for a solution to this. It was basically either we solve this somehow or we fail as a company because our technology did not work as far as user experience was concerned. There are other issues with Lightning Network too. I'll just briefly explain. I've got a whole article on this that I will link to, but basically I think that it is actually impossible to make Lightning Network user-friendly because it has a bunch of peculiar properties that make it so that you can't simply send money the way that you expect. It just doesn't work like that. It works differently than that. And so I think it's impossible to make it user-friendly. So it will never work the way that users actually want a payment system to work, which is that you can simply receive money and then send money. So what happened in 2017 was that a project called Bitcoin Cash launched. So someone named Amari Sachet forked the Bitcoin Core software and made a bunch of fixes to it and ended up leading an initiative to fork BTC before Segwit was launched in August of 2017. And we watched this project eagerly. We were pretty involved. We were at the Arnhem conference, or I was at the Arnhem conference in May. I think it was May or June of that year, something like that. And that's where Amari was there, and Jihan Wu was there, and people that would subsequently be involved in Bitcoin Cash were all there. And what we decided to do is when it launched, we did some tests and realized that, okay, so the plan of Bitcoin Cash is to be like the original Bitcoin protocol, but with bigger blocks and to scale on chain. And so, well, that's what we thought was actually going to work. That's what I thought the entire time was supposed to be the plan, was to just have Bitcoin, but with an unlimited maximum block size. I never saw a problem in the original protocol. I saw it more from the perspective of a business that we just want to use it. We need to scale it and make sure it actually works. So we were extremely excited about Bitcoin Cash, and after a couple of weeks, we decided to switch over our application to Bitcoin Cash. So what we launched at the time was called yours.org. Yours.org is still around. We're not working on it very much right now, but the application still exists. Yours.org was the first application on Bitcoin Cash. So we removed all of our payment channel infrastructure and switched to fully on-chain Bitcoin Cash transactions. And so this, we were a widely used app in the Bitcoin Cash ecosystem because, well, first of all, it was the only app right away. But then, of course, we got some attention in the Bitcoin Cash world and people were using it. So we were very big fans of Bitcoin Cash. But what would happen, unfortunately, in the Bitcoin Cash world was another disagreement about what the future of the protocol was. So we ended up dividing into different camps, and I'll just summarize it and say that further drama occurred. I don't really want to go into the drama in this video, but the two camps were basically those of us that want to keep the protocol fixed and scale it on chain, which we perceive to be, the right path forward, and then other people that perceive problems with the protocol that they want to fix and make those changes. And what ended up happening was a very bitter dispute between both sides of these two camps. And my company, unfortunately, was very firmly in the middle in every single way. First of all, I simply knew everyone on both sides. But also, it's like, okay, well, I mean, there are valid arguments on both sides. But the dispute became extremely bitter. And what ended up happening was, there would ultimately be a split, and the two different, blockchains would go their separate ways. Now, there's a further complication from my company's perspective, which is that we actually raised money from both Bitmain and InChain. So our lead investor was actually Bitmain in December of 2017, and our second largest investor was InChain. We raised money from both of these companies simultaneously. This matters because they were on opposite sides of this disagreement. So a year ago, in November of 2018, when the split occurred, basically I had to make a decision about, what is the right path forward for the company. And for the reasons that I've stated, which are basically that the protocol stability trumps everything, and basically so long as there isn't a problem, there isn't anything to be fixing, we need to leave it alone and scale it, and that's it. That vision was clearly the correct path forward for the company. That the other vision of there are problems that we need to fix, I didn't agree with that. I didn't see problems that needed to be fixed. And the ambiguous future of what that protocol would be, and the sort of unclear nature about what that would mean we would have to do as a company to use it, made it unappealing to use that side of the split. So we decided to go with the one that was simple, which was set in stone protocol and scaling on chain, which I'm already convinced is going to work. So that means I had to make this decision that was extremely costly. And from an entrepreneur's perspective, I look back in hindsight and realize I was in one of those situations whereby you have to make a decision about two options, both of which are bad, and it's a matter of picking the least bad option. Because in either option, I knew that I was going to infuriate a large number of people, and that's exactly what happened. So I picked BSV because that one, like for all the reasons I'm saying, it was just the correct option, but unfortunately that meant infuriating a large number of people on the other side, on the Bitcoin Cash side. So I'll link to some of the articles and stuff. We were actually the very first company, even before InChain and CoinGeek, who supported that side. We were the first company to support it because it was extremely clear to me what the future was. And it's like, well, I may as well just go ahead and be a leader here and make an incredibly tough decision and be the first one, because, well, then at least I can say I'm the first one if I'm going to make that decision eventually anyway. There's nothing to be gained by delaying it. Let's just make the decision and move forward immediately. So we were actually the very first company before, and I hope the people from InChain and CoinGeek remember this, which is that even before they announced that they were going to support this as a separate coin, we decided to, it was mostly me. I considered it an executive decision, but we as a company moved forward with, supporting that side. So it was extremely bitter, and I lost, friends and things like this because of this. It was sadly very, very bitter. As well as, let's just say tarnished business relationships with people. But that's how it was, and I knew that that's just what happened. It's like there was no way around that. It was like, in the short term, it was the least of two bad options. The least bad of two bad options. But I will say that everything that has happened in the past year has been very encouraging with respect to the growth of the ecosystem. It's happened exactly how I thought it would happen, which is that, well, we're just scaling on chain and that's it. We now have a 2 gigabyte maximum block size. We've achieved more than 1 gigabyte size blocks. I'm not sure what the maximum size block is in practice, but we've achieved more than a gigabyte on the stress test network. I myself personally created a 128 megabyte size block. I think I created several of them by swiping money button really quickly. So we're doing it exactly the way we thought. And the other, from our business perspective, all of the metrics were reset back to zero. We actually had 0 users around the time of the split. So everything went to 0. So obviously that was extremely destructive. But we picked up after that and we started getting applications and users. And so now we have hundreds of applications using MoneyButton, and I don't know, we don't measure the number of users directly, but we measure things like the number of button swipes and the USD transaction volume, all of which are growing. So everything is growing and working the way that we hoped it would. So the plan is working, and it was extremely bitter to live through that split. But everything that's going on right now is extremely encouraging, and it's working exactly the way that I would hope that it would work. We're building the entire ecosystem. Apps are being created that are using our product, MoneyButton, integrated into their app, and we have new users, and everything's going up. So everything's working out very well. So I think this is likely to continue. I think what will happen is as the sort of extremely bitter drama that happens within the cryptocurrency industry really is quite irrelevant when it comes to actual business usage. So as we create real value for real people and real businesses, all this drama that we've had to live through to get to this point is just irrelevant. And all that matters is, are you building a product that actually solves a problem for your customers? That is the only thing that they actually care about at the end of the day. And that's exactly what we're doing right now. And all that looks extremely encouraging. And so we're going to continue using Bitcoin SV, of course. We are, it's doing exactly what it's supposed to do. Even though a lot of people created turmoil around all this stuff, it just doesn't matter. It's working as planned. Okay, so that's it in a nutshell. So I mean, it's interesting reflecting all this stuff, and the basic reasons why we're using Bitcoin SV are exactly the same now as they always have been, which is that it's the original protocol which works and does not have a problem. It solves every problem that needs to be solved at the base layer to create a system like this that can be the foundation of the entire world economy. The way of looking at it is that it's the unification of information and money. It can be the foundation of everything. It's the missing piece of the internet, because the internet also needs money, which it does not have. So it's actually better than the internet. I've sketched this out in other videos and all this stuff. But the point is that the underlying protocol solves those basic issues, and all we're doing is scaling it. So we leave it fixed as much as possible and scale it. And that is exactly what our business needs, and it's what our customers need. And so that's why we use Bitcoin SV, and that's why we're going to continue to use it. All right, that's all I have to say. Thank you for listening.